makes more money? Buying a business or investing in real estate? And also, what's more risky? And most importantly, what should you be investing your money in? I buy both businesses and real estate, and I've been building both portfolios for many years. And through my experience, I've learned some serious lessons that have cost me money, and also some lessons that have made me a lot of money. And there is a certain strategy around when and how to acquire a business, and then coupled with when and how to acquire real estate so you can win from both worlds really, and or even merge them both for ultimate success, which I will share with you to do as well. That's what I call the infinite loop of wealth. Now, if you appreciate me sharing some of my misfortunes in real estate and business investing and just business in general, and turning them into lessons, and then sharing what's worked exceptionally well for my clients and I, please give me some love, hit that like button. I truly appreciate your contribution to the channel. Thank you so much. Also, I do both real estate investing and business investing, and I love both. But one strategy makes far more money, and there is a time and place in life for both. And my job through this video is to share with you when to acquire each of these. Let's dig into real estate. I absolutely love real estate. Now, I bought real estate after buying businesses. Now, some people buy real estate before they buy businesses, or even come to the optionality of thinking that they can buy a business. Maybe you learn about real estate first, and there's no right or wrong. But let's go through some pros and cons of real estate, and we'll go through that in business as well. And then we'll talk a little bit about strategy based on where you're at in your life today. And that's going to be based on what resources you do or don't have. Now, some pros of real estate: it's less risky than investing in a business. As much as I am an advocate for teaching people to buy businesses, real estate does have less risk, and that's a pro to it. But also it can be a con as well, and there's pros and cons to business. So let me get to those. Now, the reason there's less risk in real estate is because those markets are typically moving a lot slower, and supply and demand do play a part of it. But typically the supply and demand, like moving houses, takes a lot longer than changing things in a business, typically, depending on the size of the business. And these are very general terms. So that's a pro with real estate, which means it's less risky. It does move a little bit slower, which is also a pro as well in certain time periods. Now, real estate, what I love about real estate is it is easier to get debt. To go to a finance broker and acquire debt, it's far easier to do that for real estate. It's something that has land value and also has property value, material value, the dwelling. And then also there's a big market that you can get a lot of comparables from. So the valuations are far more solid typically because there's so much to use as comparables. So it is easier to get debt for real estate, and also at the same time, a lot cheaper to get debt for real estate. Real estate debt is typically going to have a lower interest rate than business debt if you get debt to grow your business or debt to acquire a business. Also, to get debt for real estate, you typically don't need to prove that you have some level of expertise in real estate, whereas with business you do. So that's a massive pro to real estate, is so much easier to get debt. Now, real estate, another massive pro is that it's far more passive than business, and you don't really need to actively work on it. Not saying it makes far more money, but in terms of resources, it can be far more passive in terms of time resources. Now, let's look at some cons of real estate. Like I said before, because it is less risk, it is slower moving, and it typically won't grow as fast as a business. There's some limitations to it based on supply and demand. Like I said before, how many people moving house, in one certain area can take a longer period of time for a lot of people to do that versus businesses moving all together at the same time to create a lot more demand in a market. So it is a slower moving asset. Also, real estate coupled with a lot of debt is typically less cash flow. Now, these are all typicals and general statements that I'm sharing. All of these things will change from asset to asset on real estate to the different types of businesses as well. Now, with real estate, a con is that you can only manufacture so much growth from one asset. So what I mean by that is, even if you're doing flipping coupled with, long-term hold, there is limits to how much growth you can manufacture from that asset, or equity you can amass from that asset. For example, if you buy a property or real estate, is what you guys love to call it you guys call it real estate in America, and in Australia we call it property. So with real estate, you can go away and you can buy something that's a little bit run down, a little bit older, it might need a bit of TLC, you do a renovation on it, and then you could sell it and make some money. That's a quick flip, right? Then what you could also do is you could do a renovation, and then you could rent it out for a higher price than what you could have previously, because you've got a better, sexier dwelling, really. And so what happens then is you could then go away, and that's basically you're maxing out the value of that real estate by doing a renovation and then the holding it and waiting for the market to grow. Maybe there are some caveats that if you buy a bigger block of land and you do developments, or you buy a block of land with one house and then you subdivide and you cut a bunch of the property up and sell it off individually, yes, you can manufacture equity, but there is a ceiling typically to that one asset that you do purchase in how much it can grow, whereas with business typically there is no ceiling. So yeah, it's slower and you can only manufacture so much in a short period of time. Typically, to get the best returns, it does typically take a lot of time, and I guess that's with business as well, but real estate a lot more prominent. Now let's talk about business pros and cons. I'll talk about the cons first probably. Normally the con with a business is more active income. Typically, if most people that acquire a business under the 7-figure range, under $1 million, are typically going to be working in the business themselves and typically going to be an operator. And that requires resources like your time and your attention and your thought processing. Also, it requires resources like funds to go into it if you want to grow it and scale it a lot quicker too. But typically a business around that range will earn enough income to put back into the business that you can help grow it too. The con is that it is a more active income. With real estate, say you're going to buy and hold a property with real estate, you'll pretty much put a property manager in place and they'll do the work for you, and maybe you get an email once or twice a year saying we need to change this thing with the plumbing, or we need a new air conditioning system, or we need maintenance for this, and you typically just say get me through 2 or 3 quotes, and then you get the 2 or 3 quotes sent to you by email, and you just choose the one that you feel is best. That's what I do with my residential properties. Commercial property is a bit different. I won't go into commercial property too much. If you guys do want to know more about commercial property and investing in commercial property, let me know. I can maybe, do a comparable of commercial property investing versus business investing. I do love commercial property. It is an amazing asset, but it still also, poses the same level of risk and comparisons with business and residential real estate. So that's one con. Moving on from the con of business being a bit more active is that it's riskier. So with a business, things move fast, and online businesses, things move fast with algorithms. There's more changes in the market and specifically more competition. Think about it. Anybody can become your competitor overnight, maybe not as large as you and maybe not taking as much market share as you at the start, but competition can be a lot more fierce. There's no barrier to entry in an online business unless it's, you've got a large business that you're really competing with. There is a barrier to entry with real estate. Typically, you've got to earn a certain amount of money before you get financing to acquire property. So because business moves a lot faster, it is a lot more riskier. Because of that, the higher the risk, the higher the returns. So a good pro to online businesses, or all businesses I should say, is there's more cash flow. You can get a better ROI from a business in terms of just money alone. Now, most people, when we're talking about ROI and investing, most people are talking about investing dollars. When I talk about ROI, it's return on your investment in time, money, effort, and energy. But if we're just talking about money purely here, the business does provide a better ROI. Now, the ROI can be astronomical, but the hidden risks can be bad as well. If you don't know much about buying an online business or buying a business itself, there are hidden risks that you probably won't see. So that's where it's worth you speaking to an advisor like myself to help you look at the due diligence and point out those certain risks. Or if you want me to go and buy a business for you, reach out, I do that. Anyway, if you want my resource on how to do due diligence, basically you can get my due diligence framework for free. Go to buyingonlinebusinesses.com/free resources to get my due diligence framework that I use and my clients use that takes the guesswork out of buying a business. Back to my point on the ROI being astronomical. Typically when you buy a successful business, the yield can be 20 to 30% or even more. Now, 20 to 30% is pretty average, right? That's the average. Now, you can get a lot more and you can get less for the less riskier businesses. Personally, I have bought a business, it was quite a few years ago now, and the business I bought, I achieved 100% return on my investment in just 7 months. Now, that's phenomenal. And that's when multiples were a little bit lower. You still can do that these days. I would love to say it was all me, but I was lucky to buy the business and it had some real goodwill in the business that allowed it to achieve that certain result with some strategic investments for myself. But yeah, so you can achieve great ROI from just buying and holding that. Now, when you compare that to buying a real estate property or a piece of real estate, typically the growth rate of that per year is anywhere from 5 to 8%, depending on the market. I know in Australia, they roughly say around 8%. We have a very strong real estate market in Australia. But then you compare that to 20 to 30% average, maybe it's a 7% average for real estate and 20 to 30% for business, a massive difference, right? You're also buying an established customer base, you're buying existing revenue streams, brand, its recognition, and all that sort of stuff. Now, one awesome thing with business is that there's no ceiling. Like I mentioned, you can manufacture unlimited amount of growth. There's unlimited amount of potential in business typically, right? And with real estate, like I mentioned before, you've only got so much things you can do to manufacture equity in terms of buying, renovating, holding, and then maybe even some subdividing if you were able to do so with a bigger block of land. Now, the great thing about massive pro to online business is you can build wealth so much faster because there's more return, higher cash flow, but it does take a little bit more of your time. Now, I do want to get to which one should you buy first based on where you're at in your financial position. However, I want to talk about this thing that I've coined the infinite loop of wealth and what the infinite loop of wealth actually looks like. Now, the infinite loop of wealth is basically where you can buy a business and earn a bunch of cash fast and move it into a less risky asset, slower moving asset being real estate. As that real estate slowly grows over time, you can pull out equity, which is what you can call a HELOC in the US. And you can use that equity against your property loan or your real estate loan to acquire another business while getting charged typically the lowest interest rate on the finance you've got for your real estate because you're using real estate debt here. Like I mentioned before, business debt usually has a far higher interest rate. Then with this next business you acquire using that equity, it will net you some cash and you'll earn cash faster than you will with real estate, which you can then offload into another investment property and let that investment property grow. And then eventually that will build up some equity and then you can pull out equity over time and buy another business or put that equity into the business you've got to grow it faster. Or what you could do is you could have a business and buy that real estate grows, and then you go away and you can sell that first business you have and take the cash from the profits from the sale. And then you can also pull out some equity from your property, and then you can buy a larger business, which could allow you to earn even more cash flow and then go away and buy maybe another property, right? This way you're running both strategies. You're earning more money from a faster income generating asset being a business, which typically has far more risk than real estate as well. But then you have real estate where you're offloading some of that risk into acquiring that investment property that moves slower. It has less risk and will grow over time in a far more passive way. One income is far more active and one is far more passive, and you can do this until a few years, and then you can pull out some more equity again and go again into reinvesting into business. Whether you sell everything and you acquire a larger business, like I mentioned before, you reinvest that income into your business you already have. Now, this is what I do, and I love the blend of higher risk, higher reward with the cash flow, and then I offset that risk by taking some cash out of the business by acquiring real estate investments. And I'm building a business empire and a property empire at the same time and using real estate debt to do so. So the big question is, which one should you buy first? Should you buy real estate first or should you buy a business first? Now, this is going to be dependent on where you're at in your life and what resources you have. It's going to be dependent on if you're a single person with one income, or you're a couple and you have two incomes, and or whether you have children or not, and people that you are accountable for. Now, all of these things change the factors. Now, typically, if you want to earn money a lot faster, what do you think is going to be the right strategy? Of course, buying an online business or a business. Now, with that is going to take up some of your time as well. Depending on the business you buy, will depend on how much time it may take up. That's an important factor to note. Personally, in my life, I was going to buy real estate at a younger age, and I didn't after having much discussions with my dad at the time. And I went and invested my money into the stock market. And then I eventually later on found out and discovered, oh, I could maybe buy a business. And I had to go find and learn how to do that myself. If you want to know more about my story, go to the website and my About page, check out my story there on how I got started in acquiring businesses. And so I acquired a bunch of businesses and realized, like, holy crap, like this is great. I'm earning a bunch of money, but there's also risk. Like it can fluctuate a lot. I need to go away and take some of this cash out of this online space and then put it into something that's a bit more stable, which is when I started buying real estate. And then when I started buying real estate, I started to see this thing grow. And I was like, wow, I could pull that equity out and I could go away and buy more properties, or I could go away and buy another business or reinvest that money into my business. So it depends on what you want. If you're trying to earn money really, really fast, my preference, if I was to start again, would be to buy a business as well. Of course, none of this is financial advice. I'm not a financial advisor or planner or anything like that. Obviously built a lot of wealth, but I'm not certified in these things. So please go away and consult with an advisor if you wish. That's how I would go about it again, is if I wanted to earn more cash a lot faster and get out of my, typically most people watching this channel are wanting to replace their income and not have to work anymore, I would go the business route first, because you can achieve this a lot faster and you have the time, the energy and the commitment to put into the business. And then eventually, once you have, what I did is once I had replaced my income and I started earning more money, then I offloaded some of that risk into buying real estate. Now, if you have real estate already, maybe you already own a home. And I know a bunch of people that do this is they go away and they take out a HELOC and they go away and buy a business using their equity. And you can do both, right? You may be in a position where you can replace your income a lot faster than most people that haven't already bought a property or don't have equity somewhere sitting around. So that's a possibility as well. Or maybe, depending where you're at financially, some people come to me with a couple of $1 million, say they've got $2 million, and you could do both. Maybe you could go away and buy 2 residential properties, 2 500K properties, and then you could go buy $1 million business. So you might have 2 real estate properties and then you might have 1 business. Now, half that, same thing. Maybe you go away and buy 200,000-$300,000 properties. That's 600K, and you go buy a 400K business. Totally up to you, depending on what resources you have. I typically tell people to not buy a business under the 100K range, because then under the 50K range, because then you're typically buying a startup. As time increases and businesses get better, typically that money, that threshold of where you start does change. Initially it used to be 5K. Now I mentioned 10K and then 20K, and then now between 20 to 50K you can enter that range. But typically the larger the asset you buy, typically the less risk and the more money you're actually going to make. There's so much in this that I mentioned. If you guys do have questions and you want me to talk about my portfolio in terms of business, my portfolio in terms of real estate, please let me know. Ask me questions below. Give me some ideas on what sort of videos you guys would like me to create around different topics of investing and building a real estate empire and a business empire, and how you merge those in together using great debt. Hey YouTube watcher, what's up? It's Jared Krause here. If you watch this video up until now, please smash the like button. I'm glad you liked the video, and I hope you appreciated all the effort I put into investing in my time, my money in real estate and business to get here. So I really appreciate the like. Also, please, possibly, I don't know, maybe consider subscribing, because my commitment on YouTube is about to explode. I'm talking more stories, polls, more engagement, more surprise and delight, and more great videos to come. So hope you consider it, and I'll see you on the next one.